Hello traders, you're welcome to this video and I especially welcome you back to the Forex Geek channel. Now in this video, we are going to discuss the smooth RSI inverse Fisher transform indicator. Okay, it's a custom indicator, so you will need to download it from an external site, and after that, you'll need to add it to your indicators library, and you would have to restart your terminal before you'll be able to use it on your chart. Okay, so as we can see, the indicator is actually an oscillator. All right, it tries to give traders insight into momentum. Okay, it's an indicator that was introduced by Sylvain Vervoort in October 2010 issue of Stocks and Commodities magazine. All right, but there is no need to go into the history of the indicator. So we're just going to be looking straight at how to use this indicator to get good trading opportunities. Okay, it actually applies a rainbow weighted moving average to smooth the price curve. All right, the indicator tries to smoothen out price curve by applying rainbow weighted moving average. All right, now as we can see, there is an overbought level and an oversold level. Okay, on the chart you can see that, right? So whenever the indicator gets into the overbought territory, basically it shows that the bullish momentum is getting weak. All right, that is like the first notion that it gives, right? That the bullish momentum is getting weak, but it doesn't mean that you should exit your buy trade just yet. Okay, make use of trend lines. I'm going to keep on emphasizing that, right? Make use of trend lines. Okay, so when you have plotted your trend line, mind you, I recommend using this indicator in a trending market. Okay, not in a ranging market. Please use it in a trending market. So whenever the trend has been identified and you find out that the indicator gets into the overbought territory, right? What you should watch out for is a sign, right? A sign of a pullback or a reversal, right? For example, as we can see, the indicator got into the overbought region here, right? As you can see, that point was still close to the trend line. So how can you exit your buy when the price is just bouncing off the trend line? So you have to wait until the indicator curves starts curving, not necessarily curves down, but starts curving down. You can see that when it enters the overbought territory, it's usually flat, right? You can see it's usually flat. Whenever it's in the overbought or the oversold, it's usually flat. But in some cases, you're going to see some sharp price movement, like some sharp movement like this, right? In some cases, it's not always, right? In some cases, but most of the times, it's usually flat when it's in the overbought, oversold regions. So whenever it is flat, do not do anything yet, okay? Until you have the indicator curving back out of the extreme level. For example, as it's curving back down out of the overbought level, you can then exit your buy. All right, you can exit your buy. And by the way, always make use of horizontal support and resistance levels. Okay, mark out the horizontal support and resistance levels that you have on your chart so that it can give you more confidence to whether enter or exit your trades, combined with the signals given by the smooth RSI inverse Fisher transform indicator. Okay, so as you can see in this case, we are in a buy trend, right? So ideally, you'll be looking for buy opportunities. So your buy opportunity comes when the price has bounced off the trend line and at the same time, the indicator has entered the oversold territory and is pointing upwards. That's just the time to enter a buy. So we'll have considered entering a buy around here, set stop loss below the previous swing low, and then you can actually take a profit at resistance levels, or if you like holding trades for long, you can just ride the trend till the end, okay? And how do you know when the trade has ended? When there is a break of structure, all right? So when you have a break of structure, perhaps the price breaks down below the trend line, then you can exit your buy trade if you are holding it for long. But if you are opening multiple trades within the trend, then you can exit at resistance levels or when the indicator enters overbought territory and starts curving down. Then you enter another buy when the indicator bounces off the trend line, sorry, when the price bounces off the trend line and the indicator enters oversold territory, and start coming up again, enter a buy, and then same thing, exit at resistance. When it comes down again, wait for the indicator to enter oversold, start pointing upwards, enter another buy, and when it rises to resistance, you can actually exit, or you wait for the indicator to enter overbought territory and starts coming down, and you exit again. So you can see that we had multiple buy opportunities within the trend. Okay, so if you like to open multiple trades within the trend, then you can grab those opportunities as fast as you can, right? And then if you want to hold trades for long, then just enter. You can be trailing your stop loss, right? If you had entered a buy here, once a new low has formed, you can take your stop loss to that previous low. Like we had a new low from here, so if your stop loss was here before, you carry it to this previous low. When the new low forms again, you carry your stop loss to the previous low. When another low forms, you carry your stop loss to the previous low. When another low forms, you carry your stop loss to the previous low, and it continues like that until you finally exit the trade. All right. So whether you are a long-term trader, the type that holds trades for weeks or for months, right? Because you can see that this particular trend lasted for months. Yeah, this trend started around, in fact, the trend started here, right? It started around, is it June? You can see the date here. It started around June, and it continued all the way till November, right? So you can see July, August, September, October, November, about 5 months, right? So if you are a long-term trader, like trader that holds trades for months, then you would have been in this buy trade for these 5 months. Okay, but if you are the type that just hold trades for perhaps a couple of weeks or some days, then you can be entering and exiting and entering and exiting and entering and exiting. All right, basically. So pay attention to the signals given by the indicator within the overbought and oversold territories, and always ensure that you pay attention to good risk management. Okay, do not trade with an amount that you cannot afford to lose, and do not risk more than 2% of your account balance in a single trade. All right, ensure that you always observe good risk to reward ratio as well. Okay, so that is it for this video. If you have any experience using the smoothed RSI inverse Fisher transform indicator, you might want to share your experience with us in the comment section. How has this indicator been for you? Has it been effective? And what are your advice with respect to this indicator? All right, I'd like to hear your thoughts actually. And if you have any questions at all, kindly drop your questions in the comment section. I'd love to hear from you. Okay. In the meantime, thank you for watching, and I hope to see you in the next video. If you have not liked this video yet, kindly do that now. And if you've not yet subscribed to the channel, you might want to do that now as well. And don't forget to hit the notification bell so that you do not miss out on more trading content like this. Okay. Thank you for watching, and I'll see you in the next video.